Hello, everyone. My name is James. I'm the founder and the CEO of DFG, so a family office. I started by 2011. We have been operating for 11 years and focus investment into cryptos. I'm very happy to be back to Canis with the next weather and also back to the conference at ETHCC. I have been chatting with a few great people and having listened to a few presentations already. It's really great. So today my topic is DeFi 2.0. It's about institutional era of the intelligent multi-chain finance. I'm sorry about the clicker issues. So I have 4 agendas today. First, I'm going to talk a little bit about the history. And the second is what is missing in the DeFi space before. And what kind of problem we have solved right now is the third part I'm planning to talk about. The fourth is the institutional adoptions. Just take a brief look at the DeFi. It's actually not a short time period. When we start to have DeFi back to 2017, it's almost 9 years, almost a decade right now. We have a lot of famous OG projects come at that time, including MakerDAO, Ether Data, Bangkok, and 2018 famous project including Uniswap, RV Protocols, 2019, DYDX Synthetics, and of course 2020, the DeFi Summer, Year Finance, Curve Finance, and 2021 GMX and others. We have been actually having a lot of great projects coming to the DeFi ecosystem in the first 5 years. Then because of the overuse of our leverage, then the club of Luna and FTX have massive negative impact on the market, where I think DeFi is still great. For example, we have Hyperliquid also doing very well in the recent 3 years, have conducted more than $4 trillion in their future trading, and also $140 billion in their spot tradings. So I think overall speaking, DeFi is pretty robust and successfully passed the stress test after the FTX and also Luna crash. Initially, I believe people want to use DeFi in the early days just because of the high yield, right? So for example, because of the high yield, we have 15x of the TVL, which make it, $180 billion in the peak in 2021. I think somehow at that stage it's a bubble, and also the DeFi industry is not very robust and not very mature. But people are just moving in, participating in the ecosystem because of the high yield, and also because of that, we have a massive incident in 2021 with the over leverage. Then after Terra and FTX, I believe DeFi industry from the people outside DeFi is a little bit quiet, but actually we are making very good progress, and the data data actually prove this point. We can see that, for example, the lending protocol cleared more than $50 billion after what happened in 2021, and also exchange layer of settlement is actually more than $2 trillion. Payment stablecoin transaction is even higher with $8 trillion in settlement. These are all important, I think, fintech or financial milestones for DeFi, which prove that we have actually successfully passed the stress test and doing pretty well, I think, in the recent years. But let's see, if we want institutional investors to come into DeFi place, which they are doing right now, what is the reason why they are not there in the past? So I think there are 6 reasons why DeFi is uninvestable for institutional investors in the past. The first is scalability issues. At that time, in the early stage, it still only have 15 TPS. In the peak in 2021, if you participate in DeFi, you will see the gas fee you pay is crazy, like 2 to 200 per trade. And where else in NASDAQ, the TPS is like 2,400, which is way higher than Ethereum at that time. Second is about security. I think the hack we're facing in the early stage of DeFi is the main reason why people are hesitating whether I should pursue the DeFi protocol or not. The third is the risk framework. I think there's no actual risk framework at that time. The fourth, I think, is something which people don't really pinpoint or talk a lot, which is the governance risk. Because, I mean, a lot of protocol governance are actually very poor at that time. Somehow the centralized foundation entity have too much powers, which make the protocols no different than centralized institution, whereas there's no actually regulation toward these kind of DeFi protocols. So this actually make the DeFi protocol even worse than the centralized institution at that time. So governance risk is also one of the reasons I think we haven't done very well at the beginning. The fifth is people talk a lot about the regulatory risk. There's no KYC, AML in the early stage, but we have been discussed a lot recently among other peoples whether this should be applied to the DeFi protocols. Last but not least is usability barriers. I just heard, I mean, in the early stage it's terrible. Now I think it's better, but still things happen. Just like I heard a story a few weeks ago, someone want to buy like $50 million of RV tokens, but just like ignore the slippage and end up with doing pretty badly. So maybe, I mean, there could be other reasons behind it, right? Maybe this guy don't understand English. Maybe this guy clicked the button too quickly. There could be all kind of reasons, but how to make sure the users will use the protocol safely is also some kind of improvement we have been made in the past few years. Okay, so beyond like what I'm talking about, what has changed I think quietly in the past few years, which is actually pretty impressive. The first is about cross-chain solutions. Initially, I think liquidity is pretty fragmented among all the protocols. But now, if you check the data right now, these kind of either bridge or other solutions actually done pretty well in the recent years. We have processed the monthly volume for that is $40 billion, which is not small. Annualized is $500 billion. This is a massive number, and which already, I mean, in a large part solved the liquidity fragmentation problems in the crypto space. The second and the third I want to say is more about we have started building the connection between the crypto asset and also the traditional asset. For example, the Chainlink cooperation with the Swift system is also a important or great example of that. Now I think with that kind of integrations, we can work with more than 11,000 banks together connect with these crypto and blockchains, and we will see more cooperation and partnership happens in the future. So I think this is the first things I would say make great improvement in the past few years. The second is about the UX UI. That's my thought. I think now if I use a product right now, it's 10x better than when I use this like when the DeFi begins. There are few things has been made and improved. The first, the outcome based execution is really important. It's about what, it's not about how. So this is the first things we have been improved. The second, of course, if we want institutional investor to invest, they are not like retail investor. Basically, one single person just do whatever she or he want to do. There could be a situation that institutional investor want multi-sig, right? Programmatical compliance and multi-sig is also important, and we have made this progress in the past few years. And the last one I would say gap abstractions. If anyone use the on-chain DeFi protocol, you will feel it's very bad before, because you basically need to buy a small amount of token at a random centralized exchange and send it to other protocols as a gas fee, right? So this is a terrible experience. You're basically wasting your time on that. And with the gas abstraction, I think this will eliminate the problem in a whole, and also institutional players, it doesn't even make sense for them to holding these kind of small coins on their balance sheet just for the gas purpose. The third part is about intelligence on chain. I think the intelligence on chain also is the great progress we have been made in the past few years. The first one is AI agent. I think previously it's all about narrative, but I think now we are at the stage about moving these about AI agent moving from speculative concept to the more like protocols utilities. For example, the ERC 804, that makes the massive scalabilities possible. And then now we have more than 100,000 agents right now. Some of them are doing pretty well. For example, the near ones, BitTensor, Subnetwork, and others. The second part of the intelligence on chain was say about the votes. If you check the data, actually the AUM for all the votes actually has been doubled to more than $10 billion. And now because of you putting the more like AI integrated things, it can do smart things like, for example, I want a certain number of APY, but I want to control my risk, right? This can help you do that. So this is also something I think which we have been making great progress in the past few years. There's a few examples like there's Bitwise cooperate with Murphy protocols on that. The TVL is more than $2.5 billion. Chaos Labs have processed more than $5 billion in transaction volumes. The third part of the intelligence on chain is about security. I mean, according to CertiK, the data alone for the hack back to 2012 is $3.35 billion. It's a massive number of hack. What AI can do is helping you do auditing and like behavior intelligence. For example, also can deduct threat. Because like a human being, you cannot always check every data on chain, which a lot of things AI can help you do that. So this is actually the third part of intelligence on chain I want to talk about. So what is really the key change for institutional player to come into place? I would say now I think the layer 2 scalings as well as the formal securities turn DeFis from a retail play to an institutional play. So this is very important, and also plus the institutional KYC procedure and the regulation clarity. These are also helping us moving from the DeFi 1.0 to DeFi 2.0. So here's a graph that can show you clearly what's the difference between the early stage and nowadays. Ethereum getting scared for 100x. The security is much better right now. The KYC, at least we have some of the solutions like on-chain KYC investigations, chainless. For the governance, which I mentioned before, it's more anonymous before, but now we have like for example time logs, professional management, more decentralized like governance. Also about the custody, we have multi-sig solution right now. Regulations, there's literally zero regulation at the early stage of DeFi. Right now we have EU's, Genesis X and Clarity Act in US, and all kind of like a sandbox in different countries. Cross-chains, the volume is significantly higher right now, it's much safer right now. And also the risk, I think we have more professional risk managers right now. So all these things has been improved quietly in the last few years, which actually already bring the institutional player coming into the place of the DeFis. So they are here, they are not the future, they are moving in, but they were moving more capital into the DeFi protocol in the future, which people will notice this. So already we have a few great examples. For example, BlackRock working with Uniswap on the builder phone, it's past like $2.5 billion in TVL, and also as the largest asset management company in the world, they buy a certain amount of unit token as a strategic reserve. Also, Kraken with Nasdaq, basically they integrate into the X stocks like tokenized equity gateways for Krakens. Maple Finance working with Candle. And the Japanese bank SMBC work with Northbound. There's all kind of great examples. We see traditional big players is working with the DeFi protocols right now. We will see more in the future. There's a few others, here, Ondo, Plum, Cantos. I think one thing I want to mention is about RWA. People are talking about RWA a lot. I think it still have a long path to go, but certainly RWA is helping bridging the gap here. Because for traditional world, I mean, the size of the asset is much bigger than the native crypto assets. There's no harm about bringing these assets on-chain and letting these kind of people using the DeFi protocol to trade, to lend, to do all kind of financial activities. And for the traditional traders or like investors, it makes ton of sense for them to actually using the DeFi protocols for this. For example, the DeFi settlement is definitely, the speed is much quicker. You can trade 24/7. And also there's programmable yield distributions. So there's all tons of benefit for that. But to move such a massive amount of asset on chain, you will face so many hurdles. So it takes time for that. But I certainly think RWA is bridging the gap here. We'll be helping DeFi protocol to become better in the future. We already see like great growth, like a 14x on the TVO side for these tokenized RWAs, 640,000 tokenized participators, and more than 20 banks participating into this. Yeah, so I think overall speaking, for the DeFi protocol, of course, we want more people's traditional investor to come into the place. But for them, also it makes tons of sense. This is the graph I wrote. But basically, what I'm trying to describe is, for them, it is something that going to help them maximizing their capital efficiency in a safe way. So that's what DeFi does. And for them, it makes perfect sense for them. This is the opportunity they will get, which is no way that exists in the traditional world. Yeah, this is the index. So what I described all like above seems to be very positive, but the reality is like the index shows actually DeFi don't have a great performance. But that's the, I think for an investor like me, that's the right time to make the investment. Because I think in 2020 first, we can see that's actually a bubble, right? Usually that's how historic repeat. You know, you have a bubble, then push the price to very high, then it suddenly goes down, and but the industry actually is growing in a very solid way, but you don't see the price moving up. But for investor, a small investor, this is the best timing to make the investment. Because eventually, if you believe and if you think this is going to be the future, and there will be more people, including traditional investors, will invest into DeFi, this is the best window. So I firmly believe in the next few years, we will see actually the graph of the index to be very different than the recent 3 years. Okay, so what is to summarize a little bit, what is the bottom line here? The first, DeFi is not a speculative technology anymore. The second, the barriers are down right now. So it's not very difficult to enter the DeFi, and the infrastructure is much more solid than the early days. The third is institutional investors are here. They just start doing this in a very quiet way, and people now know this. So they are here. We keep talking about institutional investors investing in the place. They are here already, but they are just going to deploy more capital in the future. And let's see. Last, I would say, let's see what happens in the next few years. I think the next 24 months will be very important and very crucial to DeFi protocol. I feel like this will be the a very good 24 months for the DeFi protocols and the industry to grow. So thank you, everyone. This is always the last sentence I will say. Now let's onboarding the next billion user. I will keep saying that until the industry hit this milestone. Thank you, everyone.